Welcome back to the Innovator, the Imitator, and the Idiot. I'm Kyle Wong with Moxie, Colorado.
I'm Corey Martin with Bank of England Mortgage here in Denver, Colorado.
Thank you for joining us. This will not be the first podcast of the new year as you're listening to it. However, it is the first podcast we have recorded this year.
That's right.
If I'm not mistaken.
We recorded
in person.
Yes, in person. That's right. In
so
person.
New year, new us. Welcome back, everybody.
Boys are back.
Yeah, we got the beautiful view back, and we are face to face. Today we're talking about inventory in the market. What does that mean? How interest rates affect it? New build, supply and demand, historic sales. We'll give you some numbers. We'll go through all of that. So what the heck is inventory, Corey?
Yeah, so when we're talking about what is inventory, specifically in our market, right, in the housing market, I think that the simplest way is available homes.
Yeah.
Homes that are on the market, homes that are for sale. Right, I think that's the simplest way to put it. There are some other factors that go into it when we start to look at like data and statistics like new builds or homes that are currently being built. But the simplest way to think of it is how many homes are for sale.
Yeah, and for some of you more seasoned investors or other types, the reason why we go through and explain things like that is we want to keep it bottom shelf, right? Like we want somebody to be able to tune in and hear this for the first time and be like, I don't even know what the first thing is that they said. So we're keeping it very simple. That's exactly it. Inventory in our market just means available homes for sale. And let's jump into some numbers.
Yeah, I think right now we could both agree, and I think all of the experts, and even if you're not an expert, I think that people would agree that inventory is low right now.
Absolutely.
Across the market, not just here in Colorado, not just here in Denver, not just here in South Denver. Inventory is low across the country due to so many different things. I think that the first thing would be interest rates. When we talk about what's keeping inventory low, it's really that interest rates are higher, and what's happened is when you have higher interest rates, fewer people can qualify for a home. Mm-hmm. So think of it as like if your interest rate, if you're qualified to purchase a $350,000 house at 5.5%, then when it jumps to 6.5 or 7, chances are you can't qualify for that home.
Yeah,
right?
That's a different story.
Right, and so that is in turn, you would think that puts, that keeps people that would increase inventory. Fewer people in the market that are able to buy means that just the same amount of houses are going on the market at the same rate. Right. That would increase inventory, but that's not what happens. Essentially, when sellers see that interest rates are going up, they're less likely to sell their home as well, right?
Right, because they have to go somewhere too.
Exactly.
And also sellers know, if their agent's advising them well, sellers know that when interest rates go up and they go to sell their house, they're just going to have less traffic, right? Yeah. There are fewer people that can afford the house. There are fewer people that are going to see the house.
Yeah.
So a lot less likely that you're going to get the offer that you want in the time frame that you want.
Yep. That means you're probably less likely to sell.
Yeah, exactly. So another thing that we use to measure inventory is, oh my gosh, now it's spacing my mind. What was it, 1.9?
Home markets, not homes on the market. Oh my!
No, we're the professionals here.
Monthly supply of new houses.
Yes, monthly supply of homes, which we are currently at 1.9 months of supply, which that may mean nothing to you, but historically that's pretty low.
Yes.
That's pretty low, meaning how long would it take to sell all the supply that we have on the market at any given time, which means assuming we sold everything that's out there available right now, at least in our area, it would take less than 2 months, and then boom, nothing.
No houses for sale.
Yeah.
That's pretty low, right? I think generally we're looking for about a 6-month supply is healthy. That would say that, okay, look, we go 6 months and sell out all the homes that are on market. And that's generally what we want. And right now we're running at about a third of that.
Right, which is important because a lot of people, especially buyers, when I reach out and talk to them, or potential buyers, they're like, oh, I'm scared, things have totally stopped. Like it's not the market it used to be. That's true. It's not the market it used to be, but homes are still going like that. So if you're interested in anything, like now is the time. And I just say that because it's just funny hearing people say like, oh, I don't know if we can do it anymore. This doesn't make sense. Like 1.9 months inventory is crazy low compared to like the 6-month average that we are used to having.
Yeah, absolutely. Well, and then you think about, the offers that are on the home, right? If inventory is low, what does that mean for the buyer? What does that mean for the seller? That means that you would think that there's more offers on one property, but that also means that there's fewer people in the market to purchase.
Exactly.
So that actually shrinks the offers on that property. At least that's what we're seeing here in Denver. And so it actually could mean that you have an opportunity to get into a home that, it's less competitive for you to get onto that, to get in, make an offer on that home.
Yeah, I think people hear that a lot. Like it's competitive, it's this, it's that. Like what does that actually mean? That's a great point. I think right now in particular, I feel like everybody's heard this, everybody says this, but right now in particular, we're in a good spot for buyers. And let me tell you why. I have a buyer that I'm currently under contract for. We came in to get under contract for this house 11 grand under. We got $1,000 credit at closing. And then after the inspection came through, we've got a bunch of work going in. So windows, radon mitigation system, HVAC service, clean, repair, all that stuff. And on top of all of that, a home warranty going towards the buyer from the seller. Because what happens is, since we came out of COVID times, everybody's like, oh my gosh, the market shifted. They hit their brakes, went so far on the other end that now sellers are trying to incentivize buyers to their homes, right? I think come spring, come summer, interest rates are going to level out a little bit, but they're probably going to be floating not super far away from what they are now. But sellers are going to be more reasonable with their expectations, not only with their selling, but like, hey, like this is what I'm pricing it at. Here's where we're going to leave it at. Yeah. And buyers are going to kind of flood back into the market. But this gap right now, this 2, 3, 4 months maybe, is really a prime time for you to get out there and shop while everybody else is still scared of the rates, right? Like, what is it? Warren Buffett, you know the quote. Yeah. While everybody else is scared, be greedy. When everybody else is greedy, be scared.
That's it.
Something about investing, but it applies to real estate as well.
Absolutely.
Anyways, to bring us back.
No, but you're absolutely right. Where we're at right now, this is a great time in the market. You would think that with low inventory, that means that it's going to be more competitive. That would make it harder for your offer to get accepted. And I think the point here is that, listen, it's actually a lot easier to get your offer accepted right now, despite inventory being low, because there are fewer buyers in the market. As we look at moving forward, I think that we're going to see inventory get better. Obviously, in the coming months, there are interest rates. We are going to see interest rates drop a little bit, especially Q2 going into Q3. I expect them to be almost the point lower.
Really?
Yeah.
No kidding. Okay.
Half point to a point lower. But then, there's going to be more people are more likely to move in the summer months. And so inventory is going to go up. So it's not necessarily, it's going to be a little bit harder for you to get your offer accepted in the coming months. We're also going to see more new builds, hopefully, in the coming months as well, right? Like new builds obviously are a positive thing for housing inventory. And let me explain why. If I am selling my home, my home is on the market, that is +1, right? Mm-hmm. +1. Where am I going to live?
Right.
Right. And so it's usually that's -1, right? I'm going to go buy another house, right? And so that's usually a wash. Well, this new build is actually adding a home to the market. You know what I'm saying? That without a person that it's got to move to it or move out of it, right? And so with new builds, or with the increase in not an increase in new builds, with new builds coming available, we should see a positive impact on inventory. Now what that does to the competitiveness of the market, we shall see. But I do think that there's an opportunity here for us to have more houses on the market as new builds get to do better.
Yeah, I think I heard some crazy statistic when I was in Colorado Springs at a meeting talking about, just basic economic state of things, but particularly when they talked about housing, I think if they increased the number of people that they did in 2021, the same every year up until 2050, but they built exponentially up to 2050, they still wouldn't have enough homes for everybody. And that's the thing about this is like everybody mentions the '08 crash and obviously you have recessionary periods. We've talked about that. We're not financial experts in that regard or economists. Like we know there are ebbs and there are flows. But back then, there were predatory loan types. There was a crazy, crazy low demand for homes. Like people were just satisfied with the inventory in their market. And I think if you look up the inventory numbers in months, it was a lot. It was a lot higher than 1.9. I'll just say that. But these days, we are just short homes. We're just short homes. And then a quick note on new builds, since you mentioned that, I've seen here's another reason why I think this is a great opportunity for you as buyers, just because you have more options. But a lot of the new builds I've seen since kind of middle to late 2022, a lot of them stopped production. They definitely weren't building quite as fast. In doing so, they need to sell the inventory that they have, right? Like they have deadlines they need to meet. They need to get these homes sold and off their hands. And so I just went into a development in North Colorado Springs and Briargate off of Interquest, and some of those new builds there are offering up to $20,000 or $30,000 back to you as the buyer. And that was unheard of because I mean, even 6 months prior, you were put on a wait list. A year prior, you were put on a wait list and you had to pay over. You know what I mean? So it was crazy going from that to the fact that, hey, you as the buyer can walk up today and we'll give you $30,000 back on this home,
Oh, yeah. It's insane. Going back to your point about just like what's happening or how the difference between where we're at now and versus where we're at in 2008. In 2008, we were looking at, or 2009. Beginning of 2009, we had a 10-month supply of new houses. Right?
That's a big difference for reference. That's a
huge difference, right? So, a massive difference that just speaks to like the difference in the supply and demand, right? The demand in 2008, 2009 was much, much lower, right? Now we have a lower demand. We do have a lower demand, but there are still more people that are actually coming into. There are more people that are coming into the market, increasing the demand, and we know that that it's an artificially low demand, right? We know that the demand is low because we've raked
prices and rates.
Prices and rates have gone up. When rates come down, a little bit.
And certainly when prices come down,
we're going to see demand skyrocket. And so going back to the ebb and the flow, I think right now we're kind of at like, on the up as far as demand goes. And you know what I mean? Like obviously the supply is kind of doing this, but it's also starting to do this. And at some point in time, they're both going to do this and they're actually going to intersect. And shoot, we're going to be right back at the same spot we were in like June of 2020, right? Where it's super competitive. And houses and prices are through the roof as well, but we're not there yet. We've got some time until we get there.
Yeah. As for numbers, we got some quick stats. So, historic sales by year. This is from RE Colorado. Their numbers they pull. It's our local MLS in the Denver metro area. So we had approximately just under 4,000 listings in January of 2018. And as you guys may or may not know, during the spring and summer months, I mean, inventory goes way up, demand goes way up. There's just a lot more transaction. It's kind of like a bell curve. So January, it's pretty low, spring, summer, and then it kind of comes back down during fall, winter. People just don't want to move for a plethora of reasons. So in July of 2018, we got it's about 7,500 listings. Let's fast forward to July 2020. We reached almost 12,000 listings.
My God.
And probably about 12,000 transactions, therefore. And then we came back down in January of 21 to about, 5,500 or so, 5,000. And so just most recently, January 2022, it's about 5,000 listings. And then in July 2022, it's about 7,000. So you can see it has trended up, but there's a big discrepancy between, summer and winter months. And so if you are a buyer or a seller, that's something very important to keep in mind. If you're going to be selling in the summer, there's going to be a lot more demand.
and there's going to be a lot more people doing it.
Yeah,
right.
Yeah,
like just also, transacting business.
Yeah, that's it. I think that we can. What we're saying here is that we can expect inventory to go up here in the next few months.
Yes.
We absolutely expect inventory to go up, not just because of new builds, but also because people sell their house in the summer. You know, as a parent, you don't want to sell your house and then start all over right before your kid goes on spring break.
Heck no.
Right? Or, if you are let's say you're a person who's selling your condo, you're a move-up buyer, right? Selling your condo, moving into your first single family residence. You ain't trying to go up and down them stairs in February.
Heck no, not with the ice, man.
Right? I think movers cost more in February, right? At least the insurance does.
Yeah, that's funny.
That's just part of it. And so we absolutely, like you said, we anticipate inventory going up here in the next few months. But with that, we expect the supply to go up, but we also expect the demand to go up as well.
Yeah.
That has that's independent of the inventory. The demand increasing over the next few months is independent of the inventory. That's a reflection of what interest rates are going to do.
Yeah.
That's a reflection of just more people aging into the market, right? Yeah, I guess that's the right word.
32.
Yeah, right. Our average home buyer is 30, just under 35.
I was going to say, it might have actually gone up. I think it went up to 33 or 34, something like that over the past couple of years. But yeah, that being said, I mean, the real question then is, is the demand going to meet the supply of the homes that are coming up come spring and summertime, or is it going to still remain a little bit lower like it is right now, just because of interest rates, just because of prices? Because I always say this, like, you've got seller expectations and you've got buyer expectations, and really the transaction happens when those two meet.
Yeah.
So we'll see if the market reflects that or not.
Yeah, I'm really, really interested. I think that, obviously interest rates are going to be helpful for demand. I think that, how are buyers going to react? I think, if you're 33, right? If you're 33 or 34, then you were just 18, 19 years old when 2008 happened. And so you're just old enough to know that it was bad, but not old enough to have had
feel the effects.
You were still in college, right? Or maybe graduating high school, or maybe you were just, and so, you didn't feel the effects too bad, but you're still wary.
Sure.
Right? You're still wary. And so that said, I think the people that are, going into that first time, that 33 area, I think that they're going to be excited about buying this summer. I think there's going to be a lot of opportunity for people to start building generational wealth.
Yeah, I'm excited for them too. It's always so much fun when somebody comes to me with their first time home buying needs, because I'm like, this is so exciting for you. And it's also exciting for me. So I can't wait to see it through.
Oh, yeah. No matter what. It's the first-time home buyers, just an exciting part of their life, an exciting step to take, something that that, okay, things could go bad for this person. Absolutely. They can still make bad financial decisions and, end up in bankruptcy. But if they just keep doing what they've been doing, which is just paying the bills, then there's some wealth down the line for them, and
Absolutely,
it's a really, really good feeling to have. Great value that we're able to bring our clients.
Yeah. Well,
that's it, man.
With that being said, in every situation, there's always the innovator,
the imitator,
and the idiot. Thanks, guys. I'm Kyle Wong with Moxie, Colorado. Thank you for joining in.
I'm Corey Martin with Bank of England here in Denver, Colorado. If you've got any questions about personal finance or mortgages at all, or real estate financing, please don't hesitate to reach out to me at Corey Martin on Facebook. Thanks.
Yeah, and while we may be famous on a podcast and on YouTube, you can still talk to us below. I have a link. Schedule a call with us. We'll walk you through the process, answer any questions you may have.
That's right. Not too famous for you.
Not too famous for you.